Today's earnings gave us a pretty vivid look at a completely exhausted consumer base. We are looking at reports today from General Mills and Constellation Brands, and management is essentially abandoning traditional marketing just to force people to buy, like Constellation eating early margin hits just to staff an empty Mexican factory.
Right, because passive price increases are officially dead. If you looked at today's batch, the baseline shopper is actively rejecting normal grocery prices. Constellation cited gas prices specifically squeezing their lower-income buyers. General Mills basically said people are strictly waiting for promotions.
They're not really trying to wait for the macro picture to heal anymore. General Mills is literally altering the physical recipe of its foods. They're pumping 15 grams of protein into Annie's mac and cheese just to manufacture remarkability on the shelf. A normal box of basic pasta simply will not sell at full price. So they're trying to force engagement. And they paired that with a sweeping $3 billion supply chain teardown.
Because standard premiumization failed as a tool for volume growth. Constellation is taking a very similar angle. They dropped their classic brand awareness marketing entirely. Instead, they're pivoting into heavy cultural sponsorships, NFL, World Cup, and they are willingly taking immediate margin hits to fully staff that brand new Veracruz factory before it even produces physical goods.
Just to guarantee physical availability when those ads do run. But what is wild about today's batch is how these massive strategic shifts were completely masked by some disastrous-looking headline numbers.
A complete optical illusion. General Mills reported a jarring $2 billion operating loss. Constellation reported a 47% collapse in its wine and spirits segment.
I saw that General Mills loss and genuinely thought they were imploding. It looked horrific.
Except it was a pure accounting mirage. General Mills took a $2.8 billion non-cash impairment hit on some older pet food brands and a Brazil divestiture. Constellation had a scheduled brand divestiture. Strip that accounting noise out, and General Mills actually saw adjusted earnings jump roughly 48% sequentially. The market caught on, and the stock spiked.
Yes, but the underlying business reality is still rough if you look closely. Premiumization is buckling. General Mills admitted their high-end wilderness dog food took a heavy hit because consumers are just trading away from expensive shelf real estate.
And there is a real physical execution risk building for Constellation over the next quarter. They physically shipped more beer to distributors this quarter than those distributors actually sold to retail customers.
So they stuffed the channel ahead of the summer.
Exactly. So if that massive NFL marketing blitz fails to convert those tired consumers, those distributor warehouses are going to clog violently heading into the winter. They're trading near-term cash for market share, but it is a highly constrained physical bet.
The individual company episodes in the feed hold the complete call transcripts showing exactly how these teams are restructuring their footprints and managing those physical inventories. We'll catch you next time.